What is going on? Welcome back to the Coinist Podcast. I'm your host, Luke, and today I have a pretty special episode. I'm speaking with Delphi Digital, Tom Shaughnessy, co-founder, the man himself. Really enjoyed speaking with Delphi over the past several months, really all of 2019. I try to have them on at least once a month, maybe every couple months. I spoke with Kevin Kelly, for those of you guys who have been listening for a while, beginning of the year. If you didn't listen to that episode, I'm sure that you won't miss another Delphi episode, because they basically called the bottom with their UTXO analysis. Me and Kevin walked through that before Bitcoin had bottomed, obviously. I spoke with Yan a few months ago, looking at altcoin cycles and why the environment just was not ready yet for alts to do well. Look at how alts are doing 4 months later. And also, now with Tom, we're going to look at his crypto evolution report. So a little exclusive for all of you. You get to see some of the research from one of my favorite analysis teams in the space. They produce research for the top funds in the space. They have worked with tons of individual traders and investors as well. They're also behind the decisions of a lot of certain token models or quarterly reports that you might be seeing. Their work is kind of all over this space, even if you didn't realize it. So I always enjoy speaking with Delphi. Their work is valuable. Their research is helpful. And I just enjoy getting to know Tom and everyone else. So always a fun convo. Before we get into the episode, I do have one quick message from my sponsor, and that is Bybit Exchange, the best derivatives platform up and coming, doing billions in volume, running one of the biggest trading competitions in the space right now. There's 50 Bitcoin up for grabs. So if you're not signed up for that trading competition, you want to sign up with a team. That link is right down below this video, trading.bybit.com/venturecoinist. You get a free $50 in Bitcoin. Right? Just sign up with my link, literally a free $50 in Bitcoin just for signing up for that trading competition. If you just want to use Bybit and you're not in the trading competition, the smoothest derivatives platform to use if you're trading Bitcoin, ETH, XRP, EOS, up or down with leverage. Also, take profit, stop loss, all those things are worked in. There's no overload. That's the biggest thing. When people are coming from different derivatives platforms, I know you might be familiar with your own trading platform. Bybit is doing billions in volume. There was just a study on Twitter showing they had the least amount of slippage. So check out Bybit. I know you're going to enjoy that platform. Incredibly easy to use. No overload. I mean, the list goes on. The trading competition is huge. So use that link right down below this video. Bybit, thank you so much for sponsoring. Later this week as well, for those of you who are interested in learning a little bit more about Bybit, I like to have conversations with exchange founders. I want to give everyone, and especially you guys, behind the scenes look. I spoke with Arthur Hayes of BitMEX earlier this year. I speak with CZ every once in a while of Binance, right? If you're trading on that exchange, if your Bitcoin's on that exchange, it's probably a good idea that you understand who's running these exchanges, right? What's going on behind the scenes? What's their vision for the industry? So I'm going to Singapore later this week, and I'm speaking with Ben, the CEO of Bybit, so you guys all get a behind the scenes look. I am really excited to be speaking with them. So keep your eyes peeled. Be ready for that episode. You're going to want to smash download, especially if you're a trader, especially if you trade on Bybit. You're going to want to check that one out. Now, let's not waste any more time. Let's get into the show. This one with Tom Shaughnessy of Delphi Digital. I love speaking with these guys. I think you all are going to enjoy this. We break down Ethereum killers, how Ethereum has kept the lead so long, all the platforms launching in 2020, what to be looking out for if you're an investor, how to cut through the noise, all the above. Enjoy, guys. Let's get to the show.
Ladies and gentlemen, it's time!
You are listening to the Coinist Podcast.
Today I'm joined by Tom of Delphi. I've had a couple members of the Delphi team on before. I've had Yan Lieberman. I want to have you. Yeah, I want to have you guys, Kevin. I want to have you guys on every single month. But I'm finally joined by the man himself, Tom. What's going on, Tom?
It's awesome. Thanks so much for having me on, Luke. I love your show. I think you ask great questions, and I'm glad to be on here.
Let's, we have a ton of stuff we're going to dive into. I don't want to waste any time. So let's just do that. But first, actually, I will have you give a pitch of Delphi. There's probably some listeners who are unfamiliar with what Delphi Digital is. I would best categorize you as kind of like a buy-side research, or maybe you would say it's sell-side. But I would say one of the top research teams in the space. One of the things that I found interesting when I was talking with Yan about what you and the rest of the team spend time on is actually, you're obviously passing on research to institutional investors and to retail investors and to funds. But you actually work with teams directly in terms of helping them in their token economics and all those different things. So what does Delphi do? What do you spend the most time on? What's the best way to describe it?
Yeah, Luke, that was actually a great overview. I mean, I don't even know if I could add any color. That was great, but yeah, we're just full-time research analysts in the space providing institutional crypto research. So our weekly commentaries that our partner Kevin, tackles all the way to our token level reports. And there's a lot of deliverables in between there. So we have a retail offering, an institutional offering. You can sign up on the site. We've had a lot of success there. And then to your point, on the consulting side, we work with projects. So we help design staking models, crypto economics, but we also work with a lot of the top funds in the space if they need consulting work too. And that, is everything from research to PowerPoints and more.
Yep. And I imagine, well, I don't know if we should say this. We can cut it out if I can't include it. But I was talking with the end. He was saying, since you're providing that research to firms, and some firms that's just not really their focus, right? They're focused on managing the money and not doing so much research. I mean, you're behind a lot of the decisions in terms of their quarterly reports or in terms of themes they're interested in looking at. Your research is probably ingrained in a lot more than people even see, I would guess.
Yeah, it's a good way to think about it. We're kind of like in the shadows a bit, right? But we do work with a lot of the top funds in the space. We do a lot of research for them, but it's not really to help drive their decisions at all. It's really is just to provide the best analysis we can because it's early, right? A lot of crypto funds just don't have full research teams to do this, and it's hard to get up to speed. So we come in and try and fill that gap.
All right, I think everyone should be filled in there. What I want to talk about today, and as this series continues with Delphi, we're covering themes that are relevant to the industry right now. And one thing that's massive and will continue to be for the next year is how many of these new blockchains are launching, right? And a lot of them are poised or set up or kind of, I guess, proposed to be the Ethereum killer, or there's this smart contract war. There's 5 key points you put out in a recent report called Crypto Evolution. We're going to hit all of them. Let's start with just the biggest one, and how many of these smart contract platforms are launching in the next 2 years. How are they going to differentiate themselves? What's going on here? Just paint the picture.
Yeah, I mean, you basically nailed it on the head, right? There's a lot of layer ones launching and not store value focus. We're talking about smart contracting blockchains that are launching over the next 12 to 24 months. There's a lot of them. These are projects that have been raised money years ago, have been building quietly or building loudly, and now they're all set to launch within the next 12 to 24 months. But a lot of the projects are launching even sooner. So, basically in the report, which I did a Crypto Evolution report, part 1. This is part 2, strictly focused on these new layer ones, but there's a lot of projects launching soon. So of the projects that are slated to launch before year end, you have Handshake, Cadena with their public chain, Near Protocol, Blockstack with smart contracting functionality, Hedera Hashgraph just launched, and then Polkadot with more functionality. So these are major projects launching, hopefully by year end as crypto, so they'll definitely get delayed. But there's a lot of layer ones going on launching, so I think that we really had to cover just the chaos of this before it happens.
And then you didn't even mention, I mean, so that's year end. Next year we have Dfinity, which gets a ton of coverage. You have, pardon me, I have a gnat getting around. You have Casper Labs. I mean, there's 6 or 7 other massive ones that have gotten a lot of hype that you didn't even mention. I guess, the ICO craze has slowed down a little bit. People think less about new protocols launching or new teams raising money, but it really hasn't stopped. And even if it did, they're all still kind of slated for release towards the end of the year. What's kind of the feel on how these things are going to differentiate themselves, right? They're all going to come out. They very quickly have to establish a narrative or else they aren't relevant. How does a project differentiate itself as soon as it's launched?
Yeah, it's a good question. And I mean, to your earlier point you brought up, there's a lot of protocols that are launching, after year end. You're right. I mean, not all of them give set dates. A lot of them are subject to numerous delays. Dfinity is the poster child there for a project that raised at a massive valuation that's just been delayed forever, right? But you have a bunch launching after year end. That includes Dfinity, CeeLo, Flow, Oasis Labs, SpaceMess, Casper Labs, Coda, Ava Labs, NewCypher. There's a bunch. But to your point, the point of kind of my report is they have to attract developer mindshare at the end of the day. They need their time. They need them to build things. And that's kind of where I focus the report, because we can't compare apps or use cases built on top of these projects because they're not launched yet, right? So we need to compare the ecosystem around the protocols themselves. And if they're successful, then that'll attract the things built on top. So that's kind of where we kind of dove in. We looked at kind of initial funding versus some GitHub activity.
Yep.
It's not perfect because you could mess around with GitHub activity a bit, but that's what we tried to look at.
One of the things that, and that's, gosh, when I was looking at new protocols, and I think it actually still gets thrown around, EOS, obviously they raised the $4 billion. So you think about war chests with some of these projects and how much money they've raised. Telegram is another one raising billions. It doesn't necessarily correlate to how much actual development's going on. What did you see in the report? And I'm going to flash a chart on the screen for everyone listening. We'll talk about it, so don't worry. But if you're watching here, this chart, it shows you, some of the massive raises versus actually there's some $15-30 million raises, which are relatively small, that have far more commits. What's Delphi's thoughts there, and your thoughts specifically on that?
Yeah, it's a great question. I mean, I've always been of the opinion that you can't buy an ecosystem, right? EOS, to your point, is the perfect example. They raised $4 billion and nobody cares about it, right? I mean, it sucks, but it's the truth. But the point is that, that might not be the only thing to look at, right? I mean, there's ethos and architectural issues and some shadiness to EOS that might also be the reason why developers aren't there. But the point at the end of the day is developers have bills, they're not there, and EOS has the money. So what's going on? So basically the takeaway is you can't buy an ecosystem. And I know you're going to flash the chart, but if we look at EOS, which raised over $4 billion, and we compare that to the dApps built on the platform, it's nothing compared to Ethereum or even Blockstack, right, which is even younger.
Yeah.
And then if we look at other things like stars, watchers, or just items built on the protocol, EOS is getting destroyed there. But the cool thing about it is we can look at new protocols that are launching that have significant activity. So GitHub commits could be messed around, right? You could enter
you can game the system.
Space. Exactly. But there are some interesting ones we could look at. Like if you group all the ETH 2.0 clients versus their funding, the commits are off the charts. Then you could pick out some newer ones like Solana or CeeLo, which most people haven't really heard of, that have a lot of developer activity and have raised, under $30 million total.
What do you think? I mean, does that change going forward? You don't have this in the report, but I think about it a lot. ETH and Bitcoin had such a head start, focusing specifically on smart contract platforms. Ethereum versus these other chains had such a head start where it kind of, it just has this developer community. Obviously, ETH can shoot itself in the foot, and that can change. But will it change going forward? I mean, you kind of still will need the war chest, I believe. Obviously, the ethos and the culture, it's been proven that a war chest alone doesn't solve your developer problem. But going forward, do you think that it might play a bigger role, or is this always going to be a thing of you have to attract developers a different way? You have to attract them based on what are the values of this chain, what are they actually trying to accomplish versus this thing had the most hype, it had a few corporate sponsors, it had a billionaire behind it, and they raised the most money. How does that relationship evolve?
Yeah, it's a good question. I mean, there's a couple of things to unpack there. The first one is you're right that money isn't the only thing, right? Developers and a community have to resonate around the social contract of a protocol or a project. They need to be interested, right? It needs to be a new design space where they can build new things and be successful. And we need to lower all those hurdles. And we can get into how we're lowering those hurdles on certain protocols and projects, but a lot of that comes into composability and things like that. To your other point, money is definitely important, right? Everyone has bills. We don't live in magical land, right? Everyone has rent, mortgage, and kids, a girl to take on a drink, whatever you're in, whatever you want to do, right? But everyone has bills. So the point is funding is really important, but it has to be long-term sustainable funding. And the project and the protocol have to make sure that's allocated to the right teams. And the project has to be agile enough to move to new use cases and not get locked in on funding something that may not work.
Yep, I'd love the charts you guys have up. I'm going to flash these on the screen. So if you're listening to this on iTunes, Spotify, be sure to pop over to YouTube because I really like this section. It's actually an idea that I heard first from Joel Monegros way back. He was talking with Laura Shin, and it was still when we were very new and kind of the hype of, is Tron going to be faster or is EOS going to be faster? And that's, everyone was kind of comparing on those metrics. And he said, look, I don't think those metrics matter because if Ethereum continues to attract the developers that it is, eventually they just win out, right? Those features will be commoditized and kind of transfer over. So I like that idea, and seeing it now show up in your report and visualized, I think is a really nice point. Moving forward, past the dev activity and the funding maybe mismatch, you have a third point, and that's network effect being a major moat. I think everyone understands network effect. Why is it such a moat here, and can you kind of go into that point?
Yeah, it's a great question. And, Joel has some great views on the space. I mean, it goes without saying the guy's a legend, right? And I definitely agree with him on network effects. But just going into composability and network effects as a moat, there's a lot to unpack here, but the point is really simple, right? Composability is basically having all the building blocks in place so that developers can mix and match them and create new applications in their basement overnight on a weekend, right? So think about things like stablecoins, prediction markets, DEXs, wallets, integrations, tooling, all that stuff. The easier it is and the faster developers can mix and match them, the faster they can make new applications. And the goal here is that they don't have to have the application in mind. We just need to lower the hurdles so they can infinitely experiment and come up with new use cases. So I know that's a lot to unpack, but the point is, if you have all these primitives on one protocol, it makes that protocol insanely stronger from a network effect standpoint, because that's where the developers are going to go. They're going to use the primitives there. They're going to experiment there. And we're already seeing that, right? I mean, numerous examples, DAI with Kyber on Ethereum makes set protocol. And if you want to build set on a new protocol, let's say Blockstack or Tezos, which I like for different reasons, you have to first create those use cases or primitives, then create your use case, and then make sure it works. And all while trying to maintain the liquidity of DAI and the locked funds of DAI and the liquidity of Kyber. And that's really hard to do. So my point is, wherever developers can move the fastest and build, that's where they're going to go. So I think composability and network effects are very hard to break in this space.
Just so I can understand that, it's almost like even if a developer wanted to build on Tezos or somewhere else, I don't want to pick on Tezos specifically, but if they wanted to build on another chain outside of Ethereum and they were interested in that, they almost wouldn't have it. I guess the easiest route to do that, even if they didn't want to be a part of Ethereum, would still be to kind of do it on Ethereum and then transfer over, or to somehow use those building blocks and then reapply them to their new chain. They would almost have to be familiar with Ethereum already. Like, they don't really have a choice in a way.
Me and my partner MJ, who spoke about this a lot, we had a great conversation. And the point at the end of the day was, you can copy the code of MakerDAO or Kyber or Uniswap, take your pick, right? But you're not copying over the liquidity, the locked capital, the ecosystem, the stakeholders, right? Yep. So you have to first invent that on the other chain, then attract all those things, and then hopefully build out your use case. And the point is, that time, whatever it is some time. But the point is, the use case on the original chain is moving along and growing and getting stronger. And that's the issue and the moat against building on other chains. It's not only the technical issues, it's the point that you're copying and pasting while the use case on the original chain continues to grow.
What's up, guys? Quick break in the action before we get back to the show. We still have a lot to cover. Hopefully you're enjoying it so far. I have a quick message from my amazing sponsor who makes this possible every single week, and that is eToro.com, the worldwide leader in social trading and the best place, if you're based in the US, for traders to buy and sell crypto. The most exciting feature on that platform, I'm sure you've heard about it, is their copy trader feature. To get set up and try out that copy trader, go to eToro.com, or if you want a free $50, use my link. That's eToro.com/VentureCoinist. It's right below this video, or if you're listening, it should be easy enough, eToro.com/VentureCoinist. You get a free $50 right away when you create your account and deposit. Once you log into your account, you're going to realize a few things. The first thing, there are more tools on this platform to manage your portfolio, see your performance, see what other traders are doing than any other platform. The other feature we're going to talk about right now, copy trader. How to do it. Once you're set up, go to CopyTrader, scroll through the top Bitcoin, ETH, XRP traders, and just hit copy. It is that simple. You can see their performance for the past few months. You can see what assets they're holding in their portfolio. You can see what style of trades they do. After you find a trader that you like, you can just hit copy. So going over to eToro.com/VentureCoinist, get that $50 right away when you sign up and deposit. Start copy trading today. And shoot a tweet at me if you find a trader on there that's doing really well that you want to copy. Maybe I'll throw some money at him too. We'll see. So enjoy that, guys. Check out eToro.com. eToro, thank you so much for sponsoring the show. let's get back into it. Yeah, it's running a race when the other guy has a massive head start, essentially.
Yeah, yeah, exactly.
All right. The fourth point, we talked about devs a little bit. Dev capture being hard to overcome, specifically in the dev capture space. So this is taking pretty much what we just talked about, but with developers. I guess it goes back to the main point of, look, if you have enough money, you can pay a ton. Like EOS can go out and find any developer in the world, or I'm sure Libra and the Calibra Association can do the same thing. But now trying to steal them or catch up while Ethereum is growing and as we continue to move forward in time gets harder. What do you see specifically in that section? What do you want to break down there?
Yeah, I mean, a lot of it goes back to that composability idea, right? So the devs are going to go where the building blocks are, but I think it's worth talking about, developer capture from a new protocol, right? So we have all these new layer ones launching. I hope you could share that initial graph or flash that.
I will. Yeah, I'm flashing all these. For the listeners, you guys got to check this. But yeah, go ahead.
Definitely check out the video for the charts. But I guess what is worth talking about at this point for developer capture is how do the layer ones capture developers, right? They either have to steal them from Ethereum, or they can interoperate with Ethereum's devs, or they can attract some of the 20 million developers around the world that aren't involved in crypto. Right now, that sounds like a big number, and it's probably in a lot of layer one decks. But point is, a lot of those developers are never going to touch crypto, right? They're going to work on front-facing stuff and not care that the crypto is extracted away. But the point is, it's hard to attract developers. So what we could look at is what would cause Ethereum to fail and developers to leave to go to another chain or new layer one. And there are a lot of risk factors, right? And developers have left. So some of those risk factors are the inability for Ethereum to scale, whether it be layer one with sharding or layer two with scale, connects, payment stake channels or plasma if they figure it out. And then there's other things like technical issues, the switch from ETH1 to ETH2 with proof of stake. There's a lot of issues in there that can hurt Ethereum to the benefit of other layer ones. And I think it would be wrong not to consider them when we look at new layer ones, because you really have to.
Would you say that Ethereum itself and maybe something like switching to proof of stake is a bigger risk or a higher probability of causing serious problems than EOS is to passing ETH in those use cases, or Tron is to catching up, or any of these new protocols launching and stealing kind of not only the devs, but the liquidity, the users? What actually has the bigger probability of happening? ETH ruining itself for ETH, or another protocol beating ETH?
In my opinion, the biggest risk to Ethereum is Ethereum itself, by far, right? I mean, because we're already seeing where the wind is blowing, right? EOS and Tron are not able to capture viral dev communities in the face of ETH and other networks, right? But the point is, we still have these question marks. And I know there's some of the best minds in the world working on ETH 2.0. There's 9 implementations, or 9 teams working on it. But the point is, we still don't have proof of stake yet. We still don't have sharding, and we still don't have viral layer 2s working yet. I don't want to cast the stroke that it's not going to happen, because I think that these things will happen. But I also think that there are also major risk factors to Ethereum, its dev mind share, and its future.
I remember, Ethereum and upgrading to proof of stake, it was one of the things that was maybe most talked about when I was getting in. That was like mid 2017. And then also, I mean, up until now, that catalyst has really just been, it's only been beneficial for traders, because there's been this hype cycle a few times, then it dies down, and then a hype cycle, then it dies down. It continually gets kicked down the road. What are your thoughts there? This is a little bit off topic, but thinking about ETH and some potential threats to ETH, especially if Ethereum is the biggest threat to itself, what are the chances that we actually do see this transition? Have they even put a date down? Did they stop naming dates because it keeps getting kicked down the road?
It's a good multi-part question. I mean, I really think that the biggest problem some protocols haven't had or has is that they've never had a major problem. Like, I'll give you examples. Tezos is like a really clean protocol, right? Like, they've proven their implementation upgrade process. Blockstack has attracted over 250 apps built on the platform. But the issue is they've never had a major issue. So their stakeholders aren't as hardened, in my opinion, or large or viral because of the news flow that ETH has. So I think that could be an issue, but the fact is that it's easy to call out Ethereum as a white paper protocol, right? It's easy for new layer ones to say, hey, that's not working, they'll never upgrade, because these projects haven't even launched yet. They're still white papers. All of these projects are going to face long and arduous public growth phases where they have to transition or grow or evolve, and it's going to be tough, and a lot of them won't make it because they don't have the research minds in the space or they don't have large enough stakeholders. It's not to say that they can't do it. I just think it's worth bifurcating non-launch layer ones from the public transparency and a protocol like ETH that's growing in the wild. I hope that answers your question. I might have missed a bit there.
It does, but what, I mean, do you think that we actually do get this upgrade to proof of stake? I mean, when do they have a date set? Is that something you saw in your research?
Yeah, I mean, it's a multi-year process. I don't think it's going to be easy. I do think it's going to get done. So phase 0 was frozen. I think January 3rd is the prospective date for that, probably give or take a month. But I do think it's going to happen. I do think it's going to get upgraded, but I do think it's going to be hard.
Yeah. All right. That was the 5 points that I definitely wanted to hit. Past that, I actually want to have a little bit of fun. We're going to go off that report from that. I want to do a little segment called Bullish or Bearish. And I'm going to take this from your header. This might trigger a few people, and that's fine, right? If you're, especially if you've been a maximalist and you've had to close your ears because we've been talking about ETH, you can listen again because I think you'll enjoy this. I have a couple of protocols that, I always think about this idea of if you look at CoinMarketCap 2 or 3 years ago, you see wildly different names, and there's coins that were in the top 10 or in the top 100 that don't exist anymore. And just like today, right now we have Tron in the top 10 and these new protocols in the top 10. In your pinned tweet, which did numbers, you have 6 or 7 different protocols, and you talk about whether or not they're going to exist or whether they will exist. So I'm going to name one of those, and you just tell me whether you're bullish or bearish on that protocol existing in the next, after 3 years. So we'll start with XRP. Bullish that it lives on another 3 to 5 years.
Yeah, it's a good question, and obviously nothing here is financial advice, right? But
yeah, just for entertainment here.
Yeah, of course, and this plays into the layer 1 report. Is that we have dozens of very high-profile, legit projects launching, right? Where there haven't been that many launches recently. This is going to make CoinMarketCap's top 10 and on-chain FX, which I think is even better, wildly different than what it is today. This is going to change dramatically, right? So to your point on XRP, I have serious issues with XRP. I think it's just like, why are people even talking about it anymore at this point, right? It was like a 2017, 2018 thing, but take your pick here. Hundreds of pilots, nobody's actually using it. No bank is running with it. JPM Coin and Facebook are running with their own stablecoin, right? Nobody wants to deal with a volatile cryptocurrency. No one wants a company selling 60% of the supply over every quarter for the next, 30 years? It's a selling pressure. And it just doesn't make sense to transact in volatile cryptocurrency over borders or for people. And you're up against SWIFT, so good luck. There's a lot of other issues to unpack there, but to your earlier point, the question is whether or not it'll be here in 3 years.
Yeah.
And I hate to say it, but Ripple just has a lot of money. And if we've seen anything with EOS, the projects with a lot of money, it's a competitive advantage. They can hire the best lawyers. They can get around stuff. So XRP and Ripple will be here in 3 years, but I just think they're going to grow ever more pointless as their funding drifts away and people move on to better projects.
Okay, I'm gonna bite my tongue on giving my opinion on that because I'll let you kind of be the martyr there on Twitter and getting the hate from the XRP army. I'm sure they're already piling up on the YouTube comments.
It's happened before. Don't worry.
It's an excellent coin to trade, so I actually love XRP army. I love you guys too.
From a trading perspective, I couldn't agree more. Yeah, for sure.
Let's hit one more, and we're not just dunking on projects. I think that the research that you in your team do, I think, is valuable. And even if you're very bullish on a coin, I like to hear usually the negative perspectives because then you can understand what are the risks for a certain coin. So I don't want to just dunk on coins. I hope that's not how this comes off. But I am interested in your thoughts on Tron. It's a project where before this Justin Sun kind of PR scandal, yes, they maybe take the PR stunts a little bit too far anyways, but my thought process was, look, in Asia, a lot of that market is still pretty optimistic about new protocols launching, and is very, I think they're a little bit more advanced in terms of, gaming on the blockchain, all these different things. I thought Tron was kind of positioned to take advantage of that. Now it maybe doesn't look so positive for Tron. So bullish or bearish on Tron surviving or being irrelevant in the next 3 years?
Yeah, it's a good question. And, we're not here to knock everything just for the face of it, right? I'm a huge fan of Bitcoin and ETH, but I just walked through all the issues I think of that'll happen with ETH. So I'm definitely on the same page as you there.
Yeah.
Tron, to your point, is, people in the US need to think about the culture in other countries, right? Right? It's totally different. People in Asia want to gamble, right? They want to build use cases where they can make money. It's very different from the West, where it's more, I think, altruistic, where we want to build projects and, we're not too concerned about net income as long as we can get a multiple, right? So I think that Tron definitely has a use case over there for gambling, but there's just too many issues. I mean, Justin Sun just copy and pastes the newest use case he can find. I mean, I think I was reading something yesterday how he's literally running with the word parachains, which Polkadot uses for scaling.
Yeah.
I couldn't believe that. So will it be here? Look, everything will be here. It's just a question of the liquidity and the price.
Yeah.
I think Tron definitely will not be where it is today in 3 years.
They also, before the parachain, there was DeFi. That was one of the biggest things at Consensus. He was on billboards and elevators with DeFi.
All over Consensus. Everybody was taking pictures with him.
Yeah, this one is a little bit more kind of down the middle. I think there's going to be more people who are neutral on this. I think those two were maybe easy. But Litecoin, what are your thoughts, and not whether or not it's going to exist? I imagine Litecoin is going to stick around for a while as kind of the test net for Bitcoin, or a lot of different proposed use cases, or why Litecoin is important to the ecosystem. What are your thoughts, though, for Litecoin as we go forward? I think one of the biggest, I don't know if it was your chart, maybe it was Delphi's, but we talked about developer activity. I think someone posted a chart of Litecoin's developer activity lately, and it was like non-existent. And they are planning to add some, confidential transactions, and those, potentially it can act as that test net for Bitcoin, so those can get brought in. But what are your thoughts on Litecoin as this thing evolves?
Yeah, Luke, you're picking all the coins I have issues with. I like it. It's interesting. Litecoin as Bitcoin's test net Litecoin's a huge issue in my opinion. So the first thing is, do we need Litecoin if we have Bitcoin with Lightning, right? And the answer is no, because Lightning on Bitcoin is Litecoin's entire use case, right? Yeah. Cheap, faster transactions. So we don't need it if Lightning on Bitcoin takes off. The other question is developer activity. I don't know whether it was Multicoin that shared it. I made a joke about it, but Litecoin has no developer activity. I mean, show me 10 developers building on Litecoin. I just literally can't find it on their GitHub or anywhere. So no developer activity is an issue, especially when you're up against Bitcoin with Lightning. Like if you look at the 7 teams building out Lightning on Bitcoin, it's just incredible. Like Lightning Labs is just crushing it. So I think it's worth putting in perspective. If your entire use case is being built on the major chain, you may have an issue competing.
Okay. I like all those perspectives. Like I said, and Tom, you agree with me on this. It's not to dunk on those chains. It's the exact same thing with Ethereum. It's good to propose the risks and to think about those risks, because as an investor, you have to be able to quantify the risk. You have to be able to think about what would cause this thing to fail. So I'm glad we get to cover a few of those. If you're in one of those if you're in one of those communities, don't show up on this wall and take us down. It's actually for your benefit.
No, look, I couldn't agree more. And from a trading perspective, totally different conversation, right? These may offer great trading opportunities, great learning opportunities. Maybe they have a use case that I'm not aware of, right? Maybe they're growing in different areas, but I take the space really seriously, right? Like we're trying to build out the infrastructure of the future, and we're not going to get there on hopes and dreams. We're going to get there by comparing these, picking them apart, and comparing them to what's launching and what's live. So I definitely am not here to just, destroy every coin. There's a lot of coins I like, but I really think, to your point, it makes sense to really have good conversations about the issues.
Yeah. This research piece, the crypto evolution, I will have all the charts on YouTube. Like I said, if you're listening to this, pop on over to the video because it is worth seeing this research report. It's been an absolute pleasure to kind of go through it with you and get the well-rounded view of the projects. I think on Twitter and elsewhere, sometimes you just get, why is this project the next thing? Or, how is this project going to get the 10, 100x? You have to be thinking about the risks there as well. One more bullish bearish question that we can have a little bit of fun with, and I don't want to pin you on a price prediction. I've said this with the last couple of guests because people, sometimes I see their eyes blow up. They're like, I don't want to fucking guess that. And I don't want you to guess it either. I think price predictions a year out are pretty useless. But I have been taking a running tally just for pure entertainment. Are you bullish or bearish on Bitcoin reaching a new all-time high next year?
A tough question. Jeez. I would be bullish on it happening because I think it will happen. I definitely think Bitcoin will make new all-time highs, of course. There's no doubt, in my opinion, there. But whether it's within the next 12 months is tough because the macro climate is just getting a little murky. And the question is, do people sell their magical internet money if we go into a global recession and then buy it back on the way up because they say, hey, look, my government screwed me. Maybe I should allocate to this. And that's really bullish for crypto and Bitcoin, specifically Bitcoin. But the question is, that's a long path. And I really hope it doesn't happen. But whether that happens in the next 12 months, I don't know if that's so. I mean, Bitcoin is a new all-time high within the next 3 years. Absolutely.
All right, perfect. That works. We'll go with that. I'm taking a tally down. It's on the record. Tom, thank you so much for coming on, man. This was a pleasure. I know that you have to run in a little bit, so I don't want to keep you too long. I'm going to continue, for everyone listening, I'm going to continue to have Delphi on probably every single month. We can go over one of the reports. I think in the past we've covered altcoin cycles. I had Kevin on to discuss UTXO analysis, which you guys absolutely crushed. Helped you kind of forecast that Bitcoin bottom in early 2018. I don't think enough people paid attention to that, so I'm going to continue having you guys on. Really love your research. Everyone should check them out. The links are down below. If you're listening on iTunes, Spotify, follow Tom, follow Delphi, and you can keep up with everything they're doing. But Tom, what are you looking out for the rest of the year? I know all these protocols, obviously, but conference-wise, like real life-wise, you got anything coming excited or any closing notes you want to end with here?
Yeah, Luke, it's a pleasure to be on. You're one of the people I trust and respect in the space, and your trading and analyst ability is just off the charts, literally. So I really appreciate your time and the great questions. And, to everyone listening, if, I sound a little bearish on protocols, it's because it comes from a place of let's research this, let's figure out what's wrong and let's fix it, right? Or let's build it. So hope that comes across. And, just looking forward, I'm interested, we're co-hosting, or we're the exclusive sponsor, and we're helping run the Oppenheimer conference in Cali.
Nice.
All of our members are invited there for free. So I'm looking forward to that. Just did Ethereum Tel Aviv, so excited for that. And then protocol-wise, I'm excited to see Blockstack implement smart contracting capabilities. Excited to see Tezos's Babylon fork come up. I'm excited to see ETH 2.0 reach phase 0. There's a lot going on. I want to see Polkadot's interoperability potentially take off. I want to see them go beyond Kusama. So I think there's a lot going on. We're going to be covering all of it. And we're obviously would love to come back on, Luke. This is one of our favorite podcasts.
What's before we wrap up, just so people have something to look forward with Delphi, what's the next big theme or research report you're putting out, as long as it's not private info? I know you did exchange coins before. You focused, this has been the crypto evolution report, but what's kind of one of the next themes that you maybe haven't covered that you are looking at going forward?
Yeah, it's a great question. We're getting really deep into Web3, synthetic asset tokens, derivatives, new layer ones launching. We're doing a lot of work. Our partner Kevin and Jan crush our monthly outlook for Bitcoin and our weekly commentary. So that's always recurring. So that's like a recurring work. And then we're really diving in and zooming into some specific factors here. Like Web3 is getting super interesting just because the stack is literally rebuilding the whole internet. So Handshake, ENS, replacing the DNS service all the way down to decentralized storage and compute and naming. Like there's so much going on there that I hope people don't miss, but we're obviously going to cover it for sure.
Sweet. When I had Dovey and Eric on, I don't know how many episodes ago that was, they could not stop talking about handshakes. That's something that keeps coming up, something that the listeners should have their eyes out for. Tom, thanks so much for coming on, man. This was fun. Excited to talk, continue the conversation with Delphi and with you going forward. Take
Luke,
it easy.
nothing but respect. Thanks so much.
Yep. Peace, man. Yo, just popping up to say thank you so much for tuning into the show, whether it's here on YouTube or you listen on iTunes or Spotify. I am grateful for your attention. Really appreciate everyone checking in. If you do want to leave me some feedback, tweet at me. Let me know what you thought about the show, or you can drop a comment here on YouTube, leave a rating on iTunes, do all the above. I would really appreciate that. I always like to get some feedback, see who you guys want to have on next. Right? I like to have on top funds, so you can see what they're trading, top analyst firms, see what they're thinking about these different assets, and then top exchanges, right? The biggest exchanges, so you actually know where you're buying and selling. Those are the conversations I want to have, but I always want to hear feedback from you guys. So let me know what you want to see in the show, what you want to see more of, who you want to see on. Thank you guys so much for tuning in, and I'll see you next time.